Brian, most people have Social Security. Not a lot of people have pensions these days. How can we use a fixed index annuity as a pension substitute?
That's a great question because there's only certain areas where we can get cash flow. It used to be, I think about the old days being the early 2000s when we'd be putting together a financial plan and we could have money put away in a CD that was paying, I don't know, 5.5%, 6%. No problem. You needed cash flow, just pull it out of the earnings from your CD. Money markets paid that much back then. And so it wasn't an issue as to where we were going to get our cash flow. Well, now it is. Social Security has not kept up with inflation. Pensions are going away. Most people watching this video probably do not have a pension. And rental yields, cap rates have really gone down. You don't get as much on the rents. Bond yields are next to nothing. Even junk bond yields don't pay very good anymore. So it's really difficult to find investments that will pay you monthly checks. Now in retirement, you spent your whole life thinking someday I'm going to retire and I want monthly checks. And you thought they were going to be there. But again, no pension, nothing from CDs, money markets, bond yields, so forth. Where are you going to get the cash flow? So that's where we can use the fixed index annuity, which is an insurance company product. A fixed index annuity designed to pay you lifetime cash flow is a tool we can use along with Social Security and real estate investments for rents and dividend paying stocks, other things like that. But it's a primary tool to provide for lifetime cash flow.
So who is a fixed index annuity most suited for? Who can take the best advantage of this?
Yeah, so you have to have a lump sum of money to do a fixed index annuity. It can be from your non-qualified account or it can be from your IRA type accounts. So maybe you don't have a pension but you have $1 million 401k plan and you roll that 401k plan into your IRA account. From that IRA, you can buy an IRA fixed index annuity, so it's not a taxable event. And there's many different fixed index annuities out there. There's hundreds and probably thousands of them. There's many companies that offer them, so you need to find somebody that understands which ones are best for your situation. You can get ones that start paying right away, monthly. Well, what's wrong with that? Well, what's wrong with that is maybe it won't pay a lot because you didn't give the insurance company very much time to have that money and invest it. And maybe it doesn't have an increase in cash flow for the rest of your life. So check might look good today, not so good in 20 years. Or you can have one that's deferred, where you wait 3 years, 5 years, or even 10 years before you start it. You might have one where you're not sure if you ever need it, and so you can have it deferred and just wait and see on that. There's also fixed index annuities that offer increasing lifetime cash flow designed to combat inflation. And so that's another area you can look at. And some have death benefits and some even have long-term care benefits. So there's a lot of different attributes, potential within a fixed index annuity. You have to get the right one for you. But like I said, there's just a lot of different ways that you can design within your portfolio. You can even mix and match. You might have one fixed index annuity that starts cash flow in 3 years that's flat for life, and another in 10 years that have an increasing cash flow for life. And you might do that in the case where you want to start Social Security earlier, but you're worried about losing your raises had you waited. Well, now you got that fixed index annuity in place to be that raise down the road.
So it sounds like the fixed index annuity has a lot of benefits. Who would not be suitable for a fixed index annuity as a pension substitute?
Yeah, not everybody needs cash flow over and above what they have. Maybe you have a great pension and Social Security and rentals and DSTs and REITs and all this stuff, and you go, well, I don't really spend, I'm pretty frugal. I only spend 70 grand a year and I've got 150 coming in from all these sources. Well, maybe you don't need a fixed index annuity. Maybe you're an investor that likes to go for it, that's interested in just maxing out your growth potential. Okay, maybe you don't want the security of monthly lifetime long checks. Because, you know, some people ask me, one of the questions I get asked is, what's my rate of return going to be on my fixed index annuity for pension for life and as a pension substitute? And I say, oh, that's easy to answer. Just tell me the day you're going to die and I can probably tell you about what that rate's going to be. Well, I don't know when I'm going to die. Exactly. If you live a long time, your rate of return is really good because insurance companies are going to have to pay you monthly for as long as you live. If you live to be 95 years old, they lose, you win, because they didn't plan on you living that long. But even if you don't live a long time, I mean, that's not a good thing, but if you don't live a long time, fixed index annuities are designed to refund the undistributed portion to your heirs if you die prematurely. So really, there isn't that risk of loss either from a short life or a long life. Certainly in long life, you'll have a higher rate of return than other investments because you got many years of monthly cash flow from that insurance company.
Brian, can you give me an example of a client that you've helped with a fixed index annuity?
Yeah, there's so many people that come to me just absolutely worried about the stock market. Now, I could show them every graph, and they've been showed every graph by people that sell the stock market. You got to be in the market, miss. You're 90 years old or 80 years old, and I can show you graphs going back to 1920 showing how great the market is. Well, that's great and all, but maybe they can't sleep at night. And maybe they just want to hang on to what they have and leave it to their kids or whatever the case may be. They don't need to take chances, and they keep getting people saying, hey, take some chances with your money. And they're like, I don't want to. What can I do about this? So certainly fixed index annuities can solve that, but as a pension substitute, it's best to start those earlier in life. Don't wait until you're 65, 70 years old and come to your advisor and say, I want one of those pension substitute fixed index annuities. They probably won't pay very much over the course of your life, not as much as they would have had you started them early. So if you're thinking about you're going to want a pension-like investment in your retirement years, think about that in your 40s, 50s, early 60s. That's when you'll get the most bang for the buck from one of these.
Brian, good information about fixed index annuities. Thanks for telling us all about that.